Good morning, everybody. Philip, David, Infinity, Sergio, Dan, Ed, Wade, Craig, Francois, Svenborn, Slidge, Ryan, Donald, Jen, Rob, Ryan. Good morning, everybody. How's it going? Laura, Ed, David, Rungemer, as always. Mary, JB, Campbell, good to see you. Cam, and Alan, Ray. How's it going, everybody? How's it going? Well, McDonald's earnings out this morning, and, well, looks like turning a little sour here. Turning a little bit sour. Look at that. Down 9, about 3%. And, well, that contrasts starkly with PayPal. PayPal had never reported earnings before the market opens. Look at this. They missed on the top, beat on the bottom, and they're up $4 right now. Was closer, a little closer to 10 earlier, but nice little pop on PayPal. I thought they might probably pop. If you go look at the description from yesterday's video, I actually wrote that in there that something was interesting. I just forgot to talk about it, and I didn't buy anything. So can't get them all, can't trade them all. But that was an interesting tell, I guess you might say, that they had never reported before the market opened, but they were going to do it today for the first time ever for some reason. I think they had something good to talk about, and they ended up popping a little bit. So, but then both of those are absolutely crushed by this move right here. $39 up, 5% on Lilly. You know, I would be cautious here, though. I really would. You go from the high to the low there. If we stop right in this zone, right where we actually are, that could result in a retrace down to the roadmap line right there. And you can say whatever you want to about they announced a buyback and that's why they're moving. It's all crap. I hate to say it, but that's a bullish chart, actually. So that's why PayPal's up right there. And yeah, so ES looking a little bit more sour. Now, plot twist on ES here. Plot twist. It's kind of like the commercial for Chewy or whatever, where the cat sitting in the chair. He's like, plot twist. Anyway, if we get a retrace today, that could potentially set us up for a positive reaction tomorrow on FOMC. FOMC coming up tomorrow at 2 p.m. Got to be careful. Got to be careful. So, we are getting a little bit of pullback here in the pre-market. A little bit of lightning this morning. I'm just highly cautious with the FOMC coming up tomorrow. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything at all. No financial instruments, no stuff from gurus, no stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them. There's a substantial risk of loss, all right? And don't buy stuff from people like me unless you trust them. You know, make sure you trust them. Don't just fall for a slick sales presentation, all right? Like, I promise you, you watch one of those webinars, they're supposed to teach you something, you walk away, and you're like, I just bought something, but I don't know if I learned something. That was a sales presentation, all right? If you desire personal financial advice, you need to hire and consult a financial advisor. Make sure that you trust them, too. Most people out there are just trying to make some of your money into some of their money, and let's face it, somebody's going to win the lottery, but it's probably not you, right? I mean, probably not. So you got to take care of yourself. Watch out for number one. Nobody's watching out for you more than you. All right, you and your money. Now, calendar here. Like I said, we've got FOMC coming up tomorrow at 2 p.m. 2 p.m. coming in hot. So right here we had, I guess the employment cost index came out a little spicy, and I guess that caused the market to pull back. If you want to put reasons to things, I don't know. You can say whatever you want to with the narrative. You can debate me all day long. You're not going to convince me that the price charts matter more than the news. And I mean, the news matters more than the price charts. Flip it, reverse it, as Willy Wonka says. Strike that, reverse it. That news, just like the news that matters, and the news that makes the bubbles to the top only bubbles to the top because it supports the price charts. We humans like to put reasons on things, and sometimes we're just moving the charts based on our collective subconscious herd mentality. You can believe that or not. I mean, but once I let go of the news, they've been doing way better ever since. Way better. I think the patterns matter more. Now, the big thing of the week coming up on Wednesday, tomorrow, 2 p.m. right there. I'd highlight in red if I could highlight in red, but it seems to want to highlight in gray. That's the FOMC meeting, Federal Open Market Committee. That's Jerome Powell and his board of cronies, I guess you might say. And they're going to probably, more than likely, hold the rate high. And they're going to Wall Street Journal reporting this morning, they're going to try to change the narrative to not cutting rates. That, with the market rallying since October based on 6 rate cuts this year and then 3 rate cuts this year, and then what happens if no rate cuts this year? Do we keep rallying? Do we pull back? Do we freak out? I mean, bottom line, it doesn't really matter. I mean, we're going to do what we do. But, if you like to put reasons to things, I'm just saying, like, we have the setup for a big pullback in the market. Is that the tell? I mean, you tell me. You tell me. Chicken and egg, as Goose was saying yesterday when I was talking to him. He was like, JT, it's a whole chicken and egg thing. Oh, like every time you're talking, it's chicken and egg. Like, which one's leading? Is it the news? Is it the charts? Is it something else? And I tell you, once you can decouple, quit putting reasons to things, and it really is an innate human thing. We have to put reasons to things. Like, we like stories, right? That's how we communicate, is with stories. Me sitting here talking to you is stories, and we're drawn to that sort of stuff. Like, that's the way we operate. That's it speaks to us internally, and but let's face it. Sometimes things don't happen for a reason. That's just kind of the way it works. So anyway, moving on. Back to the charts. And can we get we're holding the 30-minute roadmap line on ES. So if we spike it up here and we're up here in this zone tomorrow at 2 p.m., if we do this today, right up in here, that's like the danger zone. That's why it's a big red zone on the chart. We're hanging out just below it. If we pop up in there and we're there tomorrow during the FOMC meeting, well, odds are that's where we're heading. Why there? Because it's the daily roadmap line. Right there. Daily roadmap line. Be careful out there, please. All right? This is the treacherous next couple days in the market is what I could basically the best way I could describe it. Treacherous next couple days. And in Q, same situation. That's the red zone right there. If we turn down from there, at least here, if not pushing on down, possibly below the roadmap line on the daily NASDAQ chart. Russell, same situation. There's the big resistance zone. This one could have an outsized reaction down. All right. Now, if you didn't know, that's the S&P 500. That's the NASDAQ QQQ type stuff. S&P is SPX, SPY, XSP, all the S&P 500 stuff, QQQ, all the TQQQ, SQQQ, all the QQQ, all the NASDAQ stuff. And then Russell here, IWM, that's your small caps, Russell 2000. And then it's interesting, I think. Now, S5FI has bounced back up to the middle. Now, the warning here, we have not touched the bottom. If you're unfamiliar with this ticker, S5FI, stocks, S&P 500 stocks above their 50-day moving average. This is just a giant market oscillator. All right, the market tends to oscillate between the top and the bottom and the top and the bottom and the top and the bottom. We came up shy of touching the bottom, where we have 20% of S&P 500 stocks above their 50-day moving average. We've bounced back up to the middle. We've kind of done this kind of move before in a similar fashion on the way down. This is a potential, we tend to bounce all the way down too at this middle zone. All right, we came down, bounce up, bounce up, bounce. So this thing down here, bounce up, lower low. That kind of is the pattern when we're going down, is that we bounce, we come up short of getting into the 20, we bounce up near the middle, and then we come on down. So this is yet another warning sign, all right? If you like stories, pay attention to what the data is telling you. Like, this is a story the market's actually telling us, all right? Be careful. I keep saying it. Stocks above their 200-day is still up here, sky high. No damage done so far at all. Like the narrative, big picture, 200-day, we're still set to go higher. And it could be for a substantial amount of time, even with this top over here. See, check it out. Back here in 2021, we topped out here in April, and the market didn't make the highest high until over here in December, January, right? I mean, it bled off, even though we were making new highs. Anybody remember? You remember that back here? Back over here? We made the high in the chart back in April. And then we kept going higher and higher and higher and higher on the S&P, while the stocks above their 200-day kept going lower and lower and lower and lower. And then we peaked out right there. January 4th, 22. Be right there. January 4th, 22. And it was a rough year down till October. Actually, we started turning the bottom just slightly ahead of the October low there. That's pretty wild, huh? And at that point, when we were bottomed out, I was like, there's not enough energy in the market to go lower for now. Right now, there's lots of energy in the market to go lower. This is a cautionary tale here. If yesterday I spoke about it quite a bit, that the potential to go down is elevated, and we could go down in a big way, right back down to where we were in October of 22. We could go revisit that if something more sinister develops in the market. There's that much air and built up wind in the market. All right. And stocks above the 20-day, moving down even smaller time frame than the 50. And we went higher. Now we're going lower. And a bounce was normal. A lot of times we get this double, triple bounce situation at the bottom before we go shooting back up to the top. This one's a little faster, a little more volatile. We tend to shoot from the top to the bottom much more often. Of course, it's a faster chart, 20-day moving average. So right now, hanging in the middle again, this could support going lower, but it also could support going higher. That's why it's a little bit of a coin flip zone, and all the things I said yesterday still relevant today. So all the things I said yesterday, wow, look at that. That one stopped out, and all the things I said yesterday were, if we're above this pink zone, this red zone, if we're above it, come time for the FOMC, probably going higher. If we're at it, or right in it, probably going down. Now, the plot twist this morning, if we get a big pullback today and we're down here, come tomorrow, we may launch up through that pink zone on the FOMC. So that's a new twist that the market's presented this morning that I hadn't really considered until I was looking at the pullback that we're potentially working on today. And just as a reminder, at 5 p.m., I'm going live and doing your requests. So if you got charts that you want me to do requests, Tuesday is the day that I do that, and at 5 p.m. So set your reminder in your phone, make sure you subscribe to the channel, and you come back later today for 30 minutes of awesome requests right there. So I just wanted to throw that out there. And we'll look at the market and where we're at, and look at the earnings that are coming out tonight. We've got some earnings announcements coming out tonight, and I can pull up the right chart. Right there it was. Looks like we have Amazon after the close. Amazon coming in hot. Look right here. We got Amazon, AMD, Supermicro, SMCI, Starbucks, Riot, Pinterest, Caesars, Root, Lemonade, Onkyo, however you say that thing. That's not a common word. So, and then before the open tomorrow, Pfizer, CVS, Barrick, MasterCard, Norwegian, Wingstop, Heinz, Kraft Heinz, Ketchup's reporting earnings. And for the weeks out, though, we have Apple coming in here. So the rest of this week's kind of spicy on earnings, too, right with FOMC. So this is, which one's stronger? Are earnings stronger or FOMC stronger? You tell me. Now, Amazon and AMD, Supermicro could set the tone as we come into FOMC tomorrow. This is all interesting. The whole narrative building up here. So, moving on down. Click back on the chart. Amazon here could use a pullback. Right, this reaction could be like this, right down to the roadmap line. We haven't been there in a while. October. And before that was when we busted through. We came up, hit the bottom, busted up through, came back, tested from the top, got the extension all the way up to the prior high. Once, twice, 3 times we tested. Haven't broke through. Probably going to retrace. Highly likely we retrace before we just bust out. All right, that's just the pattern. I'm not betting on it, though. I'm not placing a bet on Amazon at this point. It could very well pop, but it doesn't look like it at this point. It has the chart pattern. It's kind of like Meta. I'm like 51% that we're going to do the retrace, 49% that we're just going to bust out and go. I do have a much higher target that I've been sitting on for a good long time on Amazon. So I am, big picture, bias long, but that doesn't mean we won't retrace right down here before we do that. And that could be, another year or longer before we go up there. Just throwing it out there. All right. Just throwing that out there. Circling back to oil. All out of order today. Oil looks like that's it. Like that was the rally, and we're going to push down. That's the target right now. Bust out of the channel. We may back test it and push down in here. That's support right now, but we also could go deeper on oil. Maybe that. Well, it's the Strategic Petroleum Reserve releases and this, that, and the other. And I'm telling you, all these things have nothing to do with it. We set the prices subconsciously, especially when there's futures involved. GC getting that next leg down, kind of like I thought we might. And GLD gonna push down. And it looks like it's getting close to that 210 buy zone I was talking about. What, last week? Or maybe yesterday. I've got a 210 buy target right here. It's a long-term buy. I'm looking for this pullback to pull down in this possibly as low as 208, 210 area. I'm going to be looking to buy a long-term position, long-term as in out to like 2026 probably, on options, or, shares are a viable option because there's no option, get it? There's no time limit on your shares. So, and what is it, GLDM? Yeah, GLDM right here has a much lower, what do you call it? Expense ratio. That's what. Total blank. Expense ratio. The expense ratio for GLDM, if you're going to hold shares, much lower here than GLD. We look at the expense ratio here, and 0.4. I mean, so that's like the expense ratio of GLDM is 25% of the expense ratio on GLD. And if you're moving a significant amount of money, that gets to be a significant amount of money that you're paying to an expense ratio. So I'm just throwing that out there. All right. Just throwing it. And that's actually on the decliners list this morning for the little drop we're getting in here. Circling on back to Bitcoin, getting a pullback, even though what was funny, when the Hong Kong market opened last night at like 9:30, there was a pop on Bitcoin. It was a juicy pop. We were getting spicy. Looked like we were going to push it higher. And then we ripped it. By the time that we're opening, it's kind of a sell the news situation. Today was the first day that those spot ETFs are trading on the Hong Kong market. There is required buying by the national banks of China into those ETFs. But we're seeing Bitcoin drop. Very, very similar to what we saw in the US market in January when we had the spot ETFs approved. Back here, saw an initial drop, a little bit of pop, and then a bigger drop right there. And then we got the real buying kicking off and took us higher. So that lasted, let's see, roughly 13 days. So about 2 weeks that lasted. And that fits with the narrative I was saying yesterday that we may see 2 to 3 weeks after having. 2 to 3 weeks after having. So having was Friday before last. 2 to 3 weeks. Say 21 days right here. If it takes us that long to make a bottom, which we may be down here, somewhere at the daily roadmap line, that'd be interesting, right? All come together. So watch out for that retrace. I got the big arrow on there. We may be pushing lower. Maybe. That doesn't mean that there won't be any kind of crazy volatility event in between there. All right. Just throwing that out there. High time frame, big picture. We could see this pullback down in here. Flush on down. And then we see that turn and burn. Now, that's just a one possible potential pathway. All right. Is it high probability? Right now, we're just going sideways, just in a choppy declining zone, if you will. Like these lows coming in here. Kind of a bull flag situation. We had the pole coming up in here and this consolidation, and we could break out and go higher. One dip below that low right there, maybe all it takes to wrap this thing up and explode higher. And that's a very bullish pattern. We usually see a continuation of the pole. You can put it wherever you want to. I like to put it off the low because it's more of a conservative target right there. Could take us up to this almost 100,000 area right there on the next leg. And that could go pretty quick. This one went from that low up to that high. We did that in 49 calendar days right there. So that low to that high put us up there by mid to late June. Just be careful out there. Nothing is guaranteed. We do have conflicting price patterns and targets cooking. All right, the spot ETF, or the spot market on Bitcoin looks a little different. Go look at the all-time history on the spot market. We've got a little different, slightly different chart cooking here because futures are closed on Saturday, so we get an extra day of movement in Bitcoin. In the actual, since the crypto markets are always going, there's no regulatory authority, there's no central exchange, they just always go. Now, the downside of that is that there's no central exchange and there's no official price. So every Bitcoin chart you pull up is going to have a different price on it. That's why I use the futures, because they're certified by the CME as a certified price. So you can agree with me or disagree with me whether that matters or not. I like to have consistent pricing. So I use the CME data. That's why I use the Bitcoin futures and the Ethereum futures when I pull those up. All right. So it looks like Bitcoin may be heading toward the roadmap line, but we could have already hit the 4-hour here and be working on a reversal without going all the way down to the daily. Now, Ether over here looks like it might be heading down to the daily on the futures chart. And if we go look at the spot chart, it actually has already tapped once, twice, and almost there the third time. Looks like we may actually push on down till we get a little lower support, possibly even lower. And if the US SEC classifies this as a security, we may get a knee-jerk reaction down to some lower levels down here in the 1600, possibly even 1400, possibly even all the way down to like 500 or 600. That'd be kind of crazy, but it could happen. Can happen. Very spicy. I had drawn this move up. We went a little higher, and we got the pullback right there. It just happened to took a little longer from a little higher prices there. So if we hold the roadmap line, we could do quite the extension. Entirely possible. Copy this one, copy, paste, and pull it over here. We could do it. We could be up here at 5,000 all-time highs. We do have a spot ETF in the US pending. We'll see if they get approved kind of mid-May. Maybe, maybe not. There's some people banking on it. Some people thinking maybe not. We'll see what happens. We'll see what happens. Now, the big difference, though, the big difference between Ethereum and Bitcoin, huge difference. Ethereum has no max cap. Like, there's no capped supply. Now, the way they're operating, the Bitcoin is not controlled by any central authority. Like, it's controlled by the participants. Ethereum, on the other hand, is controlled by basically one guy who sets a decision and pushes it upon a committee kind of group, and they all agree with him all the time. Like, nobody ever really bucks the head guy, Vedek Van Buren or whatever, and nobody really ever bucks him. So whatever he decides to do is how Ethereum moves, and there's no fixed supply here. Why would this go up like Bitcoin? Where is the squeeze, right? When you have infinity supply. Now, current total supply is fixed. It changes, though, constantly. There's coins added. There's coins burned. This supply is always in flux. All right. Bitcoin, on the other hand, it's always increasing, but it's capped at 21 million. And it's increasing at a pretty fixed supply. About every 10 minutes, 10.2 minutes right now, we get 3.125 Bitcoins plus added to the pot. We're going to see the subsidy is 3.125 Bitcoins right now. So that's what miners are mining, is that subsidy. I just want to throw it out there that this is a cautionary time right now. There is no fixed supply in Ethereum. So why on earth would spot ETFs create a large upside move if there's no fixed supply? Now you could say, well, the current supply, yeah, be careful. And if it gets classified as a security, watch out for the knee jerk. That may be a buying opportunity. I'm mostly out of Ethereum right now just because the potential for this to become a security and a large downside move. Dollar is still consolidating right in the zone, and the statistics say we're probably going to get a pop right up to this 108.50 area right up here. The statistics on the pattern that we're doing right here, we've busted up and like 70% likely, 70, 80, I don't know. I could pull it up, but it's not exactly the same setup here because it already did that little bounce right there. It did the statistics on it, not the bigger bounce. And maybe it's on the weekly charts. Let's see. Did we touch? No. Yeah, we did. So we did touch right there. We didn't fire off an entry, but the 6 times that we've done a bounce that it liked, we've hit the 1272 every time, 100% likely. Takes about 62 weeks to do that. So if that was the entry, I mean, it could be a while before we push on up in here. Interesting, I'd say. This one could take us 40 days. Of course, we already did that one, so It's not going to enter again unless we dip all the way back down to the roadmap line, but we're already set up to push on up to the bigger time frame there. Interesting, I think. So, and moving on, NXPI. Hello from Houston. NXPI fired off the entry there this morning. Target right up here on the daily. Pretty dang good looking. Now you can be like, well, where are the statistics, JT? And it's got an 84% likeliness to pop right on up here and tag that 274, 275 area. Usually takes about 29 average, 29 bars. That's on a daily chart, so that's 29 trading days to do that. So this thing could drift over here before it pops up in there, but it could go quite fast and be up there in the next day or 3. Could be one of the faster ones. You know, that's the thing about the average. It's kind of the middle. Like sometimes it takes a lot longer, sometimes it takes a lot shorter, sometimes it comes in right at the average. I mean, think about it. 1 out of every 2 drivers on the road is below average. 1 of you is above average. Is it you or is it the other guy? I mean, think about it. When you think about traffic and people being stupid, 1 out of every 2 people on the road, statistically speaking, one's above average, one's below average. I'm just saying. 1 out of every 2 trades, one's above average, one's below average. Messes with your mind when you start thinking about it that way. THC. Golly, what a busy chart. Let's clean that one up. And we didn't hit the roadmap line, so none of the statistics are going to matter here on this one for this time frame. And we're just kind of pushing higher here. Looks like we have the pullback over here. And we're sitting right at that resistance. Next target up, maybe 125. LDOS. Nice pop. Didn't do this time frame pattern, so keep pushing higher. And that big swing that we consolidated inside of for, gosh darn, 1, 2, 3, 4 years. It took us 4 years to break out of this consolidation. Why do I not like sideways consolidation? Look at that. 4 years. 4 years. You know, you can't even buy leaps 4 years ahead. So that would have been a long wait for that one to pay out. Now we're breaking out, heading up to the first target, second target up here at 161, and we could develop that into a bigger upside move on LDOS. Eaton, and pushing on up. Looks like a smaller time frame move, 338 and possibly 348, and support down here at the daily roadmap line. ST. Crazy pop there. That may push it. That may come right back down. I would be very cautious on that one at the moment. If you caught it, maybe consider booking profit or protecting the profit, because that could come right back down to that roadmap line. AON. Well, that's pretty beat down at this point. Let's see. That move. Yeah. That could have been all the retrace it needed. That low to that high. Doubly so. This could be set to go. That low, that high, that low. Target could be right up here. This is one of those crazy type of moves. This one can be set to go up here once we get above that roadmap line area right there. Would I buy it now? Probably not. I'd be looking for a move up through the roadmap line, come back, test it, and then head up here. Not convinced that that's the move yet. We could come up here, bounce off the bottom of the roadmap line, and head on down. There you go. Lily already talked about, you can rewind if you want to get some information on that one. MMM. Looks like I have to erase all the stuff there. We're just sitting here right at this consolidation. Like this is going to be tough. Like this has got some stuff to work through here. That's going to be a resistance zone. Found support, busted through, back tested it real good, and dropped below. Trouble. We got a whole resistance zone to work through here. Just a bunch of that can bounce off and go lower, especially since that was a 1, 2, 3 move up right there. With no extension so far, we're sitting right there at parity for this first move up. Right here is the same as that move up, and we're stopping right there. That can result in continuation lower. How much lower? That low, that high. Yeah, right down in that zone right there. Right there. Move right down in that zone. DJT. So this has got that high, that low, resistance zone right in here. Probably come up like I think I mentioned this last week. Maybe we may pop up in the zone before we do continuation down. That was a big flush. Retrace, flush again. It's kind of the way these things go. WGS. That's a med tech industry right there. Into resistance. Potential to rally up to the next one if we get above that, which would be up here. Other than that, that's not a great looking chart. I have to say. Eat Breaker International. I actually did a restaurant for these guys with our family engineering company once upon a time. So big picture, that's kind of a bullish pattern right there. Smaller picture, it's not really doing the thing yet. That's kind of a choppy sideways, maybe get a continuation lower thing. I'd be very, very cautious of not getting through this zone right here. And those highs before, right there again. This looks like a big zone where we're just going to get some consolidation, just float along sideways, just chopping around. MSTR probably still working on a retrace back down to the roadmap line. Easing the roadmap line off a little bit as we push down lower and lower. This thing could drift on down until we hit. It's been outperforming Bitcoin a lot, so coming back down, take the wind back out of it a little bit. All makes sense to me. ASML, probably going to come back down to the roadmap line. We have the resistance up here, support down here, and if we get below this support, well, we could go back down here where we consolidated back in the end of last year, beginning of this year. SMCI, resistance up here, support down here, and further support down here. We get above that, can take us out up to 1300. Skeptical. I'm skeptical, but we can do it. GEHC right down to the roadmap line, right there. We did it. GE Healthcare. This is in the medtech, biotech space. FDA gets involved. Caution is advised. If we can get back above this area right here, we can take this up to 98. Got to turn though. Got to turn. Get above that. The statistics here. There's no trades prior, so no statistics on this one. So it'd be a crapshoot. You don't have any history to work off of. I guess that was a spinoff of the bigger company GE, and GE Aerospace and GE Healthcare. And that one looks like a piece of garbage. I wouldn't even trade it. Tesla getting a little bit of retrace, and a good sign that we're showing some green this morning. First attempt on the roadmap line daily. Didn't make it through. Still got the gap down resistance all the way up there at 207-ish, 208-ish. That's a resistance. It's going to be a resistance. And doubly with the roadmap line in there now. We need to just pop on through. Now, do we pop on through tomorrow on FOMC? Maybe. Do we retrace this back down where the gap is now underneath us? We've got that gap now cooking down there. So we've got multiple things cooking here now on Tesla. Multiple things. So that the top of that box is the resistance though. Up there at the gap fill. That's the major resistance we got to push through. That could have been the bottom for now. If we can get through that resistance, next upside targets are pretty lofty. We got a 350 target, then we've got a 500 target. And things could get really spicy here if we really get going. Because that was a big time frame pullback, and we could get a big time frame move that lasts for a number of years. I don't care what the narrative is. They're kind of winning the EV market in the US. Like, they're securing their moat even deeper with like GE and Mercedes-Benz and Ford and everybody kind of rolling back on their plans for, you know, BEVs. They're just building the moat, digging it deeper. Coin. Looks like that may come down to the roadmap line. That would be my ideal place to hunt for support and an entry for a longer term pop with the crypto potential bullish move over the next 12 to 18 months. LSCC, don't get, keep your time frame in mind with crypto. Like the halving event usually kicks off, like the halving event we did in Bitcoin like 2 weeks ago, usually kicks off a bullish period that can last, I guess, a week and a half ago, that can last 12 to 18 months. So if you're trading for that, don't get caught up in the day-to-day, the swings day-to-day. Like, I know it can be hard to not watch it, oh my gosh, it's huge, but nothing else is as volatile as crypto. So if you can't stand that volatility, don't even attempt to trade it. Like, you gotta have you gotta not have FOMO, and you gotta, be able to just sleep at night. If you can't sleep at night and you got FOMO on it, you just need to turn off crypto and put it on your do not trade list. I mean, let's be honest about it. If it drives you crazy and you're getting FOMO about missing out on the moves, but the swings down, like, keep you up at night, you got to not trade it. I mean, you got to not trade it. That's the bottom line. This has potential to do this right there. Lattice semiconductor. Nice pattern. Statistics on it. Let's see. 75%, but the profit factor is pretty crap. So it's the loser. That basically means the losers are bigger than the winners. GL. Globe Life. Life insurance, healthcare. We were talking about this yesterday. That came up right near the target. And this could, if this pulls back, let's just zoom her up and talk about it here. So on this move right here that we've done, where we spiked down, we came up. If we come back down right to this zone right in here, find support. If we don't break, if we hold it right there and turn higher again, that can take us right up to that daily roadmap line. Daily roadmap line right there. If you want that line, I keep talking about it. I got a video that basically gives you the code for free, but for $5 in the description, you can jump into it and grab it and put it on your chart with an easy button. One click, super easy. And then I give you a watch list, and you get in Discord and all the extra things. So I think it's probably my most powerful indicator. I mean, I use it every chart every day. So that potential right there for that resistance. And CRWD. Probably coming down to the roadmap line. Resistance here, support here, and that's what we got on CRWD. SCCO. Well, let's see. What do we have cooking on copper? 124, 128. Next move right there. And support down here at 89. So resistance just slightly above us, and Support all the way down here. GDXU. It's a 3x leverage on gold miners. Remember, miners don't move with gold necessarily. All right, they can move together, but they can move. They can do their own beat to their own drummer, just like miners in Bitcoin and crypto. We can see that flush down there is what that target looks like on a 3x leverage. But remind you, leverage does not always follow the patterns. And we may not see this go that deep. Leverage entities don't, or leverage instruments don't always follow the patterns. And this one apparently had some sort of adjustment happen because my drawings aren't tied to the things properly. All right, that one's about to hit the roadmap line, looks like. It set up this potential upside, but we had to break with a daily close above that 117, 116.50 area for 131 on the upside. LABU, that's if we break down below this consolidation zone, watch out. I mean, long term, this thing is pretty bearish. Let's face it, this is a raising rates environment. Biotech is extremely expensive. It eats a lot of cash. A lot of cash. Is that cash best spent on biotech when you could put it in other places when we have a raising rates environment? I don't know. I don't know. The chart says probably not a great investment, and we may push on lower. We had a reverse split over here, and reverse splits are not typically bullish, so we're likely to see a lower low post split, which happened right here. Yeah, we're already lower than that split, so we could see a lower low, though, back lower than this low. GLD, already briefly talked about, looking for a move down to the 208 to 210 area, big picture, to reload my long position, but this thing could finish up anywhere in this little zone right here and take off higher once again. ALB is probably still working on hitting this lower support zone down here. Unfortunately, that just keeps on keeping on as far as grinding down. And the head and shoulders target is on down here at 85. We did this kind of big picture head and shoulders thing, not very proportional, but so far playing out. Just haven't done the final flush out. Looks like BitX, leverage Bitcoin. Well, it may very well come down and hit the roadmap line. Look at that, getting freaking close. It might do it. It might be the place. And if we get a spike down here and we hold in that 31, 28 to 30 area, this would be a pretty smoking opportunity to load up on some BitX there. This does have a high expense ratio, but since it's 2 times Bitcoin, and Bitcoin is like the most volatile asset in the world, and there's a lofty 6-figure target that a lot of people have been parroting, not just me. There's a lot of historical proof that we're likely to go to the 6-figure area on Bitcoin. So if we pull back to the 50,000 area on Bitcoin, that's probably going to push this down into this roadmap line. If we do that, opportunity to buy some shares, because the upside could be like a 3x on Bitcoin to get to the next target high in the 6-figure area, low 6 figures. If we're talking 3x on Bitcoin, we're talking 6x when you 2x it right here with this thing. 6x, 30 going to, that's a lofty number. Lofty number. I'll let you do the math on that. It's like 180. 200, 180, 200. That's just on some shares. That's not too bad. Not too bad. If you don't believe it, as I said, stay out of crypto. JNUG right here, probably going to retrace to the roadmap line. Upside target way up here, 58. UGL, that one looks like it's going to, this one could plummet down if we get a deeper pullback in gold. But that could be all the retrace we needed before we push on higher. 88.92. That one is leverage with a expense ratio at 0.95. Ultra means leverage. That's if you ever see ultra anything, it means leverage. Yum China is probably gonna dip down here to 28. ENPH. Yeah, it needs a final flush out. It really could use that. That was not bullish. Doesn't look like we're breaking out. Final flush out down here would just clean that up. COUR, Coursera. So close to a lower low. And how low can she go? That support zone right down here around $7. Whew. That's pretty rough. Pretty rough. That's what I mean, that's, could we hold the double bottom, triple bottom, quadruple bottom, whatever it is? We could. We could also push right down there to that $7 area. One spike down, nice lower low, and then take off. And I wouldn't just buy it because I want to see a reversal, because this thing can keep on keeping on and go basically to zero. All right, buys for the day. Highly cautious. Looks like we're gonna push up into the area. Not what I want to see. Not what I want to see. So S&P, let's just go there and hit this. Remember, if I said anything today that was helpful, beneficial, anything like that, give me a thumbs up. Only about 100 people left on the stream. Just after 10 o'clock. So the zone right up here, we're watching for that pop up into that 618 zone. If we get that and we reject off of it, probably going to turn down tomorrow on FOMC. Just unfortunately, that's the chart pattern that we have. This was a nice sharp 3-wave up right here. Move off the low, that move up, that retrace puts us right there with the 1272, right in there. And unfortunately, it all lines up. It all lines up that if we turn down, if we're right there tomorrow, FOMC, probably going on down to the daily roadmap line right down here. It could go fast. We could do that in 1 day or 2 days. We could be there by, Thursday or even Friday. We could be there tomorrow afternoon by the close. I mean, be pretty wicked and sinister. Be careful out there. Be careful out there. I don't know if I have jury duty tomorrow. I'll know by 30 minutes of awesome, so I'll let you know if I'm going to be around tomorrow or not. And make sure you set your reminder. Come back, hang out with me. I'll see you later. Have a great day. Be safe out there. Be careful. Be conscious safe.